All right, guys, welcome on as you're coming in. Welcome, everybody. All right, guys, welcome as you're coming on. I'm going to give a few minutes to get on so that you guys can be in. All right. I always like to give a few minutes just to be fair, because obviously, you know, when it comes to being live, it could take a little while to get things going on. So I like to give everyone a bit of time to get in. All right. So if you ever see me do that, that's the reason why, just so that you can all be in, and get things going from there. So I'll be on with you guys in a minute. And could start. So I'll start in like 1 more minute. And then after we can go from there. And take it from there. Now I'm trying to get the little thing on the bottom that says Zoom out of the way so that you can, you can have it done. So that because I think it takes a bit of space out of the actual Zoom video. So I'm trying to, make sure that it's not like that and everything like that. So let's see what happens. Now I've taken off the setting for it, so hopefully it should, it shouldn't really disturb anything, but let's see what happens anyway. I'll give like, what is it, 4 minutes past 3. All right, I'll start where we are, and then I'll go through the trades that I'm on, and then you can go from here. And then we can take it from there. We'll see what goes on. All right, so without wasting any time, let me just put this out here. Let me get started. All right, guys, so welcome to our live afternoon session. So ideally, I wanted to restart these and keep it consistent now. A lot of people have been asking about what direction they think about this pair and about that pair. So I thought the best way to do this is just to be live. Just, go out there, share what I'm looking at, what pairs I think are going to do anything or not going to do anything. What am I looking at? How do I think when I'm looking at the charts and stuff? Because I'm sure by now, if you haven't seen them already, I've given out some fantastic calls that you should all be beneficiaries of, because you should be jumping in from other groups, whether from Insta or from any of the other groups. You should be really well informed about what's been going on. But even if you're not, okay, that's fine. I'm just going to go through the pairs that I'm in, what I'm looking at, and let's go from there. So first things first, now Euro USD is a fantastic short. I've been waiting for it for a very long time. And when I say very long, I mean literally months for this price to hit this opportune area. Now, my thing is with this pair, with Euro USD, the robot actually took this trade. Now, if you're not sure what the robot I'm talking about is, I am a developer as well, and I've built an algorithm that trades how I think. I've built 2 types anyway, 2 forms. All right. One is a scalping robot. The other one can be a scalping robot, but it is a normal robot to trade on prop firms or to trade a normal account, normal live or demo, whichever account. Of course, for the purposes of making money, it will be live, but can be on a demo. So anyway, the reason why I took this trade is because we had unfulfilled efficiency here. So when the price came in and we had this strong long above this high right here, this old high was formed, all right? That the supply liquidity that was the originator of this short here hadn't been returned to, and the price attempted to go short. So when I saw this, I knew that this pullback, as strong as it is right now, which I know came from the February FOMC news as a trigger, or interest rate decision to be more specific, I knew the price will come back down here and give us another long. And I took this long down here. When the price dropped here, I took a buy from here, but I just closed it a bit too early near where this gap is. If I'd held on to it for a lot longer, obviously, I'd have been a very happy man. But it would have taken a while to do because that's like 2 months worth of swinging, which not really my style of trading. Now, moving forward from here, the long I expected, the reason why I did expect it was, of course, because of this high, where it's positioned, and also because the main key supply zone on the D1. So if I was to make some markings here to explain to you what I'm looking at. So I'm going to go over here, D1 supply zone. So this D1 supply zone here, I'm using the time frame as a reference so that I know which is which. This supply liquidity here, I knew that the price wouldn't really be trying to make any type of, the word would be a inter-month kind of short in this situation without returning here for liquidity. So I gave a shout out to my students in the Wealth Group Academy and also to you guys as well, so that you can have a feel for what I look for when I'm trading and how to take major opportunities when they arise. Now, for me, once the price wicked into this area, that was really the entry. Now, the stop loss wasn't going to be above this area. Usually stop losses, I usually set them from the 15-minute or below, or if the candles are small enough and liquidity is low, then I'll use, the lower, I'll keep it on the 30-minute. But usually my entries are 1 minute, 5 minute, and M15 if you're asking. That's usually what I go for. Okay. Now, moving forward from here, the reason why my robot took this trade anyway, a little bit late, is because I put it on and it found a continuation entry pretty much right here. And it was looking at the exact wick. So if I was to pull this back a little bit, and we could take a look here, you can see that the entry was on this exact wick over here just before the liquidity drop. So you can see the entry timing is absolutely perfect. All right. Moving forward with Euro USD, I expect the price to continue short. Now, for those of you who've been following me for a while, watching my videos and etc., then you would know that at this current stage right now, the price action that we're looking for, how can I put this? The price action that we're looking for is something with inflation at the head of our fundamental analysis. Now, I still do analyze fundamentals. For me, I look at price primarily because institutional money and governmental money know whether the market is good or not. They know which direction they're going in before they announce it. So the price is the best indicator, and it trumps every type of technical indicator or fundamental indicator. The price is the indicator to use. And with me, trading with me, if you look at my analysis, I never really use, the only indicator you ever see me use, by the way, would be one that is for risk management. And it's a tool here, which literally, if you wanted to place an entry, let's say here, you wanted a stop loss above this blue area, it will tell you according to your account size. Now, this is the trading account, so there's hardly anything in here. It's still live though, but it will tell you how much you need in order to risk a certain percentage amount, okay? Now, of course, with bigger accounts, it will tell you specifically to the pip, as long as you drag these 3 lines in the correct place, how much you need. Okay, you can also have different take profit lines. It has buttons. If you press T, then you can change this to 3 and etc. I'm not going to do that, so save it as it is. All right, but there you go. So this is really what it is when it comes to price action, okay, and indicators. I don't use any indicator apart from price because that's the key to know what's going on. Now, for me, with Euro USD, there was a bit of a scary part with this trade, just to give a recap, because these highs are equal. So there's a liquidity pool here that hasn't been touched, and the market may leave it behind for a while, okay, bearing in mind where the supply liquidity has got to. Another thing with Euro USD, which is in essence what I am saying, is that, and you'll see in a moment, that I do expect every pair that the dollar is the quote currency to continue going short as the dollar gains strength. Now, I know there's not been a lot of news and fear around the dollar, and the dollar is dying. Okay, from the last video, I explained what I mean by that. But in the short to midterm, the dollar is going to have a lot of artificial strength coming in, because that's how this financial system of the dollar works. Okay, they have to keep themselves relevant in order to stay as the world reserve currency and to stay trusted. So in order for them to do such a thing, the dollar has to find ways to artificially strengthen the dollar, which one of them is quantitative tapering, which is happening right now as a result of inflation that came in during lockdown. So everyone's paying for the lockdown furlough schemes and stimulus packages with the cost of living, but most people don't realize why prices have gone up. There's not really a broad understanding of that, okay? So from that fundamental perspective, I expect the dollar to continue gaining strength, and I expect Euro USD to continue going short. Now, if you're looking for a trade, I mean, I'm watching the low of last month because we're pretty close to it. The price has really dropped massively since last week, and it doesn't seem like it's coming back anytime soon. I guess my only thing I would be watching for, bearing in mind, if these highs were not equal, they're close to equal. They're not exactly equal. If I hover over it, high number one, if I just go over here, high number one is 1.01, 1.10920, and high number two is 1.10917. Okay, so they're very close to equal. And whenever there's the close to equal, that forms a liquidity pool, which that pool of liquidity is like a magnet for the price. At some point, they will come back up here. So that's my only concern. I'll say if these highs were kind of far apart from each other, then I'll be more happy. In fact, if the price maybe had even taken the high of the previous month using period separators, this is the month of May, this is the month of April, the price had taken a high, then I would have been a happy man and just said, you know what, let's continue for a short. But since the price hasn't done that, my focus is more to just look at what we've got going on in terms of the low here. I want to see how the price interacts with the monthly low. There's also a liquidity gap over here. There's a few, but there's an obvious one right here that the price left behind. And I remember it because when the market opened, it left a gap that it never came back into, because I was going to get back in again, but I closed a bit earlier. Now, with that in mind, I also see that we have the near perfect trend line. So we have a lot of buy order all along the way. So there's a lot of buy liquidity that the market is going to be coming for from different levels of market participants, even down over here, you know. So seeing all of this stuff over here, I'm going to put these out, okay? Buy order aggregates, all right, buy order aggregates, aggregate. So we have a few over here. We have a lot of buy order aggregates from trendline traders, robots that trade in trends and etc. Liquidity built up on the buy side since September. Now, for that reason, I do expect there to be a massive short. You can see my first take profit is down here, and I'm swinging it all the way hundreds and thousands of pips actually is what I'm expecting, because I'm expecting to hold on to these for these trades that I have on this account. My idea is to hold on to them just for teaching purposes, really. Of course, profit will come from it, and I would maybe withdraw or just continue trade. But the idea of having these is just to grow these accounts, really. Now, bearing that in mind and everything, all right, one of the things that I would say when it comes to the price action of dollar pairs or major pairs specifically, which is going to be my main focus. If you guys have any pairs you want me to look at, you can say something. But ideally, this is what I'm looking at when it comes to trading. All right. So for me, when it comes to any of the pairs where it's XUSD, like you hear me probably say in my videos, which means any other pair paired to the quote currency or the dollar as a quote currency, I expect them to go short. All right. So even as of today, we've had quite an interesting move here. I'm going to zoom in a little bit for you guys to see this. All right. Well, maybe I'll just actually put this on a new time frame so that it's a little bit more nicer for you guys. But if I go to Euro USD and then I'll move on to the other pairs really quickly, we'll look at the dollar index that will come back. If I go over to Euro USD anyway, today we've had quite an interesting move. We've had an induction of the previous week's high, okay, at an algorithmic price point level here. So this is what the price has done so far. And for me, how I'm seeing it is that if the price action is going to continue in this fashion, then we need the price to continue for a short. Now, in terms of supply and demand liquidity, we have a key area of demand over here. The demand liquidity from the month of March was the leaning ground for the price to kind of continue until the price hit this point over here, which was to fill out the unfulfilled deficiency of supply that we just looked at. So I'm hoping that today's price action, a little bit of liquidity is coming to the market, so we have some more volatility going. I'm hoping that the price uses that to kind of close strongly beneath this area. I mean, in terms of price feed also, if you look at areas like this, you know, the close of the bearish candle and the open of the next candle have these little gaps, which if I'm looking at the dates properly, this is liquidity gaps between a week or basically a weekend. This is a Friday candle, says 24th, and this is 27th. So little gaps like these, little inefficiencies need to be filled. More obvious gaps over here need to be filled. I think for me, when I'll say that Euro USD, you should be in at latest buy, is when the price breaks beneath, first of all, this major area of demand, because this massive short here was an induction to basically for the market to go for a long. All right. So when the price breaks beneath that area, that would be like a major, key point to say, you know what, between this range is where you want to look in, where my purple line is to get in. I mean, the absolute max of the range would be the demand zone that powered this movement in the first place, which is area here. So if we're looking at what's going on, I'm just drag this all the way over here. Then you'll see that the price action of what we've got going on here, and I'm going to drag this along, the latest that we should be getting in is somewhere like this, okay, where price is pulling back over here. All right. So this is the key when it comes to price action liquidity that we're looking for when it comes to the most important place for us to be. It will be here. After this price action here, everything else will be a free fall. Okay. Most of the liquidity here, we have quite a few liquidity voids all the way up to this area here. So my thing would be that we should be looking for price action to be leaving, beneath that. So as the liquidity is building, as you can see, I'm expecting the price to close beneath here. But my thing I would say to you guys, for those of you who wanted to get to Euro USD, is we need to watch the interaction with the lower. I see some of you coming to the live session. Welcome, guys, as you're coming on. What you want to look for is this low right here. The highs and lows of how price action works is from the teaching I've been teaching you guys. I started episode 1 yesterday. Price delivery mechanisms, one of the most important things for a trader to understand, apart from the fact that the price is engineered against you by default, is to understand the interactions that price has with highs and lows. What does that mean? What does it mean when the price closes with a wick and not with a body? Why does the price leave equal highs or equal lows or near to? What does that mean? Those kind of those pieces of understanding for price delivery mechanisms make a big difference in terms of what you need to do to understand price action. So for me, we'll have to look at how the price interacts with this low. So I'm going to put this here, the low of April. Okay, low of April. That will be something to watch for, okay, guys, the low of April. All right, so let's move on now. With the dollar index quickly, I wanted to kind of lay this out here because I gave you guys a shout out for the dollar index way before the price has done what it's done. And if I switch my screen, hopefully the live should switch over with you guys in a minute. If you're seeing me talking now, I guess there's a slight delay naturally because we're on Zoom. But anyway, switching over to the other chart here, you'll see that when it comes to price action with the dollar index, remember, guys, I gave you the shout before it happened that we need the price to wick into this area. You see that demand liquidity wicked into this specific area to find demand. Institutional money injected liquidity here. Orders were entered in here and order book cleared. Price gave us this first move and gave us a second return. Now, this second return here was your last chance, because if I was to put something here to kind of go through the deeper levels of liquidity, now this Fibonacci tool is not designed to actually, there's no speciality to this tool. What I'm looking at is really premium and discount pricing in the market. And if you see here that the market gave us a lot of opportunity beneath the equilibrium point here to have discount pricing, we had quite a few opportunities here. So a lot of institutional money was accumulated here until we got into this range here. And once the price closed above equilibrium, it came back above one more time, but not to it. That was enough for the price to move forward. So from the analysis I gave you guys from the game plan last week, Friday, I did tell you that there would be a natural pullback. And the thing to note as well, which is what I told the Wealth Group Academy students, is that when you see dollar pairs outside of their liquidity time, which is what happened with quite a few pairs where in the Asian session, they gave us a reversal signature. If you look at the reversal signature of the dollar, that should have given you the information to look at. So to give you preface for why I'm saying that we should be looking for continuations, look at what happened when the market opened. So the price took the high of the previous week over here after this bullish run. But look at the resulting candles. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, right? Now, out of these 9 candles, 7 of them are bearish and the price started to drop slightly. Okay, but if you look at the body of the candle, the size of the candle, which tonight I'll be teaching a bit more deeply on what liquidity looks like. Well, when we look at the size of the candles, we can see that the liquidity was initially okay, we had a bit of liquidity here, but the liquidity was thin on the bearish side, which is a significant, well, it should say price strongly bullish. And you can see that in this 1 4-hour candle, the price is closed above all 8 of these candles and is almost at the 9th, basically. Okay, look at the strength of this one H4 candle. So if we were to do the maths on this, if I drag this from here to here, that's 6 4-hour candles. So that's 24 hours, basically. Well, specifically, if I go from here to here, 1, 2, 3, 4, 5, 6 across here, 6 candles. And then also we have this number 7. So 7 times 4, we have 28 hours. So let's say a day. So just for a day and a bit to get this bearish movement here from 102 to 101. But with hours, the price has come back again. What is taken 24 hours to do, this 4-hour candle, which is not even closed yet, by the way, it won't close until 5 o'clock because the dollar index time is slightly different from normal H4 sessions. In just 4 hours, the price has come back to reclaim all of this liquidity. So I hope that lets you know that we're very strongly bullish. And notice that during this period of time, guys, in April, where the price was bouncing around, I kept saying, guys, get ready for the dollar index, get ready for the dollar index. There was a lot of negative news about the dollar. There was rumors that, Saudi Arabia has struck a deal with China to, bypass the dollar and use the Chinese yuan to buy oil. Okay. All of that was adding to the bearishness of the news. I think the news came in during this time when the price drops or somewhere nearby. All right. Now, all of this was just a tactic. But for those of you who understand price, you should have known that this was just a tactic. And now the dollar is about to shoot through the roof. I'm telling you guys that when the dollar is done, you will see the dollar way above this high sooner or later. Okay. And it's already started now. Now, I'm not going to go through the deep analysis. You can watch that on other videos. I'm going to go back here to explain to you now why I'm saying that we're in such amazing opportunities that we should be paying attention to. Okay. Now, if you have any questions about pairs you want me to look at, you can obviously go through it and then come back on later on. But this is what we have in essence in terms of price action. So I'll pull this back up here. Let's get this going. Now, the next pair that I was looking at was gold. Now, from the analysis I gave you guys on the Friday game plan analysis, you notice that over here, right here, let's put this out. Over here, the price did use this H4 area. My only kind of annoyance is that I wish the price did take the high. It came very close to it, but didn't interact with the high, and we've had a brilliant short. And at this stage right now, the price is already closed or beneath the previous day's low. So most likely the price will continue in the bearish direction. Okay. So in terms of analysis here, one of the things I would say is that for pairs that are paired against the dollar, we should be focusing on continuation entries instead of, reversal entries at the moment. Now, another pair that I'm in is AUD-USD. I gave this signal to my students yesterday before it happened. It triggered perfectly. Although my stop loss is still here, and the reason being is because there is an M15 supply zone that I'm suspicious of that price may, in fact, spike into with maybe Australian dollar news maybe, and then go for a short. I always try to give the price room here. Now, my stop losses are never usually this wide. This is just below 20 pips, which is my absolute maximum. But ideally, this is why I took the trade. One of the things I did see is that we had no induction between these lows from Friday into Monday, but the price gave us a reversal in the Asian session, which for AUD-USD, we can give it a pass because it is part Asian because of the Australian dollar. But I do expect the price to really kind of get to these lows. Now, my focus really when it comes to a pair like this is if I look to the left over here, and this is what my focus is on, is how the price interacts with this demand zone. So here we have a very strong burst of liquidity. This was from the news anyway, but you can see how strong the bullish movement is. We have about an initial 70 pips within the hour, and then an extra 10 or 20 pips, or 15 pips to be fair, in the next hour. Okay. Now the demand zone that derived that liquidity or gave us the engine of price to give us that liquidity is here. And if you notice, guys, over here, looking at the liquidity that we've got, the price beneath these lows, I'm going to put these two lows here. The price beneath these lows over here have not been hasn't returned to demand. Okay, so one of the things I would say is that even though I do believe the price is going short, I would be watching carefully to see how the price interacts with yesterday's low. So for example, if the price today takes this low and this low, but then we have a H1 body close strongly beneath this area, then what I would say as a re-entry, which would be a perfect and small kind of stop loss you can go for, the moment a H1 candle close happens beneath here, if that does happen, on the return, you should be looking for entries here. Okay, now I'll just put the low of Monday here and the low of Friday back where it is. I'll be using the same area of liquidity as my entry. Now my stop loss, I'll give you guys a comfortable stop loss, is to use the second liquidity pool or demand liquidity, to be more specific, over around this area here. And if you do that, then your entry would be at this point here. So if I put continuation entry, I'll just call it punts for short. Punt entry, let's turn this down to 8. Let's put blue or something. All right. So continuation entry will be here. And the maximum range, now this doesn't mean you have to put your stop loss here, but the maximum range for a stop loss in a situation like this for me would be to put the stop loss right over here. All right, so SL would be somewhere here. Now, again, the markets is like, the price is like it gives prophecy of what's going to happen in the future. And if I was to take a moment to show you what I mean by that, because the next question is going to be, okay, so if that trade does happen, where am I going to set my targets? Now, for me, I have my targets set very far away. And the more I zoom out, you see that my targets are nowhere near, okay? Nowhere near at all. But I'll show you what I am looking at. Now, first things first with AUD/USD, the reason why I'm kind of happy I'm in is because we have this demand zone here that the price used for this last major bullish run. Now, if you watch any of my videos about, let's say 2 or 3 months ago, possibly near January, February here, I said to you that one of the reasons why AUD/USD hasn't gone short yet, and it pulled all the way back from 2022 into this area, is because of this price action right here. When the price got to this area of supply, which is a key area of supply, by the way, one of the things that it failed to do was to return back into this supply zone area here. And now supply liquidity is what, and demand liquidity are the drivers of the market, the primary ones. And if the market ever skips an area of supply and continues shorting, then that means that we're operating in inefficiency. And this can happen over the lower time frames and higher time frames, because again, price is fractal, which means on every time frame, price does the same repeated mathematical patterns over and over again. Okay. So when the price pulled back over here and I saw the price return back to this area, you can see that the wick of the candle returned into this supply zone area. So this supply liquidity here on the weekly put us in a position where price action was going to give us a very good short. And you can see that as soon as price returned into here, we had an inductive move into supply and then a very strong short. Now, we've been in a range, and tonight I'll be teaching a little bit more about ranges of accumulation for a very long time. So last week, if we go through what's happened, the highest trigger, the biggest trigger we've had is in this area here. And why I like this trigger is because it fell right onto an algorithmic price level right over here, which is at 0.68490. And this is what I was really waiting for to get into AUD/USD. Now, of course, the price may decide to do one more long again and then go short. However, this range of accumulation where we have a demand zone that's been broken beneath and returned to, which means it's become supply liquidity now, is the perfect reason why I'm looking for a short for a very long-term move. You know, one of the things also, if I continue going down, looking at 2022, we have a liquidity pool here, a very strong one right near the low of 2022. And then we have demand over here. And to put this into perspective, on the larger scale demand is over here, but what I call intermediate or secondary demand, the price didn't return to. So when the low was formed over here, yes, the price did use demand, but it didn't return to this one. So the minimum target, I would say that AUD/USD will drop, and it will come soon. I'm sure there's going to be some sort of negative news to power it. The Australian dollar pushing here would be at least 0.61529. Now, the historical area that I'm looking for, really, when it comes to AUD/USD, should be even lower. Now, to put this here, the anatomy of price action over the last 20 years is important to look at sometimes. Okay, and if we go over to what happened here, during this period of time, the year 2000, we had a supply zone here that was capping price beneath a certain area. Now, during this period of time is when we had 9/11 and etc. about to happen. Now, when 9/11 happened in September into October now, the price was almost flat. But what did happen from a fiscal policy and monetary policy standpoint is that the central bank or I don't want to call them that, the Federal Reserve kept interest rates really low. Okay. And as a result, it meant that the dollar became cheap to buy. And there was a massive increase in dollar buying, even though you would say it caused demand, but the dollar was invested in other countries and stuff like that, which of course made the dollar weak as well for a bit too. All right. And I'm sure there was more money printing going on to kind of salvage the loss of what would happen. Now, as a result of that, we had this supply zone form, price broke above it, and it created a demand zone area here. So the order block that drives demand, and I'm going to drag this all the way over here, is this area. Now, if I mark this out, you'll see how almost scary the market is and why I say to you that the markets are controlled. What you see on the news is all designed to be kind of like the smoke and mirrors behind what's really going on. Price is engineered. So if you look at what happened, let's follow the price. So this is 2008. This is the subprime mortgage crash right here. Subprime mortgage crash right here. Now notice that when the subprime mortgage crash happened, this is the lowest point of that move when the price crashed. Soon after, when the recovery happened, we had a major influx of buying pressure on the Australian dollar versus the US dollar. Many people got out of the dollar in investment to get into other currencies, other economies. And we went all the way up to 1.10. So at one point, one Australian dollar gave us $1.10, which is a very weak dollar. Okay. And it will happen again soon, trust me. Now, surprise, surprise, during lockdown, look at where the price went to. Now, I know that lockdown seems like it was just out of the blue, but everything is planned. Every world event. What happens is that with world events, they use to put the price into areas that they always wanted to go. Because what we had here, if I go from 2008 until 2022, is that we had a 12-year, I'm going to write this down, 12-year inefficiency in demand. Okay. So this 12-year imbalance of demand was used, the coronavirus, the low of the coronavirus, you can see, look, from March 2020, the price wicked exactly where? Into this demand zone. Okay. So this was the perfect moment for the price to get into this area and do what needs to be done. Okay. Which was to fulfill demand. And if you notice, price went straight back for a low. So now what? Now, the price came into this supply zone area here, but it failed to make a new high or break structure. Okay, so what does that mean for us? Well, now we've come back to another scenario that can put the market in a position, or currency pairs in a position, where the dollar can gain a massive amount of strength this time. And also, and inflation can, be the cause of, quite a few issues. So what am I looking at? Really, for me, I believe the Australian dollar is, in fact, probably most likely going to take this alone and form a body candle in this area, because the wick is great, but the wick will get filled out at some point. And this is why I'm expecting the Australian dollar really to be going down to the 50s or 53s in the future. All right. Now, a similar pair, which will probably shock you guys even more, is NZD-USD, which is also a short right now. It's giving us a pretty good short. And whilst I'm giving this to you guys, I'm giving you entries whilst I'm giving you targets at the same time, so that you have a plethora of options to work with. Now, to look at the price action structure here, so we see that the market came for the high of the previous month, which is going to be an obvious reaction that the price would use. On top of that, it came for this liquidity pool range over here. Now, the only thing I don't like about it is that if I take this area of liquidity, which is demand, the price just missed this area to use it for an area of supply. So that's kind of like a bit of a red flag in my head. Now, however, when you scale up to higher time frames, there is this weekly demand zone anyway, which prices used to break beneath and then flip to the other side, and it's been using it as an area of supply now since the price is beneath. Now with NZD-USD, which is another pair that I really am enjoying looking at, and I mean the real trigger was up here. I think I gave you guys the entry for this already, so all of you, I mean, I'm not even in myself. I closed it, and so But if you're still in till now, kudos to you. I think that's one of the first trades I brought on the scene when I started doing the lives and stuff. But anyway, with NZUSD, look at the structure here, guys. Now, I've said to you that the dollar index is doing its I'll say one of the last major pushes for some bullishness in the market. And the dollar index doing that, the dollar pushing its strength like that, would mean that all of these other pairs like NZUSD would be pushing short. Asset classes that are dollar denominated will be pushing short. Now, let me show you something here, which I guess you may find spooky, but as I said to you, this is why price is the indicator to use. If I go over back here, let's do the same structure analysis from the year 2000. We go to the 9/11 crisis over here. Now, the supply zone that was holding price is slightly higher than ADUSD, obviously, but it's this range right here. This supply zone was the liquidity to push the price short and hold the price beneath this area until we got to 2002. Now, notice what happened. Now, price broke above this area, pulled back down strongly. We had one more reaction over here, and then we had one major push up from the 45 region to 82, this strong stretch. Now, after this strong stretch happened, you know what happened next? We had the subprime mortgage crash. So I'm going to highlight the financial crash again. Here we go. So if I was to draw this now and I put this analysis together, if I draw the body of this area here, now the body is where the liquidity is. So that's what we're focusing on when it comes to the price action here. All right. Now, if I take this area over here, draw this in blue. All right, look at what we have. Now, the price again did another inefficiency, and this one is more harder to detect unless you really look at price properly. If I zoom in just a little bit here, and let's pull this back, notice that the price, I'll move this out of the way. The low, which is 2009, the recovery era, notice what happened. The price did not return to demand before taking off. So this liquidity that you're seeing here is artificial. And the question is, where does it come from? Now, of course, this is central bank governmental levels of money, institutional too, riding on the bandwagon and pushing price short. Now, that being said, okay, it's left a strong liquidity pool that hasn't been filled down to this range over here. So the lowest point price managed to get down to, if I was to go here, is going to be the 2020 low in March 2020. We had this low here. So that's the lowest range that the price has got to. So there's still a liquidity pool at least, okay, over here. Now, I'll probably mark this out so you can see this area here. So this is the subprime mortgage crash. So I'll put that out here. Subprime mortgage crash. So the subprime mortgage crash over here, that's 2008, okay? Then we have this area over here. I'll map this out for you guys to see what I'm talking about, that we can go back to the other side of the analysis. Here's the unfulfilled efficiency, okay? So even before I do that, let me just write out. So key monthly demand liquidity. Okay, so if I put that here, this is the key monthly demand zone. And then this over here is the recovery, 2009 recovery. Okay, unfulfilled efficiency. All right, that's that. So that's the recovery period over here. All right, put this in another color. Let's make this something else that can be visible. Let's make this blue. All right, so that's that. So we've got a 2009 recovery, subprime mortgage crash, 2008. Now we've had lockdown. Now lockdown only managed to do something, which was to fulfill out one area of supply liquidity, which was this, because the price broke this supply zone area, should have returned to the other side. So during lockdown, we had that situation. And you can see here as a good example of what I was saying with AUDUSD is that even though the price wicked here, notice that the body of the candle has come back close to filling out the end of this wick, because wicks do get filled out in the end. All right, so the price filled the wick, but that's not all that's left. Okay, we still have this. So we still have this same 12-year inefficiency here on NZUSD, because price did not return to this demand zone. So where do you think my NZUSD targets are? I'm sure you're saying in your head right down here. I do expect the New Zealand dollar in the short to midterm, as the dollar index is rising massively, to get all the way back down to here. And you're going to see it. you'll notice that all of a sudden there's going to be strong bearish New Zealand dollar news, Australian dollar news that will push the prices of these assets where they want it to go. Because as soon as it gets here, I promise you guys, there's going to be a very strong buying structure going on. All right. Now, another thing to put out here is that in terms of when I said the dollar is dying, for those of you who are more well-versed with charts, if you look at this structure properly, this is still a bullish chart. If I take the two swings right here, this is the A point over here. And then I take the B point all the way back up here. All right. And then I take the C point right back down here. As soon as the price gets into here, this will be the C swing for a bullish move. You can see that the structure of an analysis here line up with what's going on. At this C point, I'm going to put here, this will be the height of the dollar strength, okay? Height of DXY strength. Once that moment comes in history, guys, then there's going to be another historical move, which is when the dollar starts to die. And at that point, you should be prepared, okay? So this structure here is why I think that this last bearish run we're having is the kind of the last effect of the dollar strength before it starts to die, which means that these pairs I've been talking about to get into, you should be looking to get into. So now how can we get into NZD/USD with all of this stuff that I've just said? Well, first things first is to look for a way to get in. And at the moment, structurally, I still don't like NZD/USD, even though it's taken the high of the previous month. We've had quite a strong liquidity void drop after that. And looking even today, the price is still kind of making its way down that road, okay? So for me personally, what I would say to you all is to focus on trying to find an entry. Now, I'll do this. If I take the low of last week and the low of this new week, so if I put these two things together here, we have no induction between these 2 weeks. The price is just reversed and seemingly stopped at an area that doesn't really make much sense and started to go for a short. Now, what can we do with NZD/USD? Well, the price has already done quite a good movement, okay? And I expect it to continue. Now, I've zoomed in a little bit so you guys can see the highs that I'm talking about over here, right? So if I go over to the H4 and then to the H1, let's look at what we can see on the daily. So on the H1 here, I still don't like it because from my eyes, unless I'm not seeing correctly, I don't even think the price came to the other side of this flip zone area here. Let's see. Okay, it did. Fantastic. So it did actually. So if we look at the anatomy of price here, so I'm going to do this. Draw this H1 right here, H1 demand zone. Now this key H1 demand zone, how can we use it? Well, to our advantage, we can do a couple of things. First thing is, let's trace the price. So if we look here, we had structural movement here. Price gave us a strong burst, returned back into discount price, and then pushed all the way up to a long, okay? The key thing is that obviously over here, we had the major reversal, and we had a liquidity pool above these highs was left behind on purpose here. And now we see the price reversed quite strongly. Now that price has broken beneath this key area that pushed the price towards this monthly high, which has been taken now. We've broken beneath this area. We've had no induction beneath the low. But what we can do is just map out where the demand range is for that, which is going to be down here. Now, interestingly, again, you can see where the price dropped into demand as a launching pad to go for a short. So there's two options. First thing I'll say is that the price has come above the high of the day, broken structure, come back again a little bit higher over here, just to make sure that it stops out anyone who's already short or to confuse anyone who's going long. And it started to drop for a short here. So what I would say to you, first things first, is to map out the high of today. Okay, this is the first thing I would say to do. And this is what I am doing, because I do want to get into NZD/USD myself. So map out the high of the day, right, which is here. Then what we want to do is observe, okay, now that the price has taken this high for the day, will it come back tomorrow? Is there any NZD news tomorrow? So the first scenario would be is that if price was to push it slightly higher within this range and take the high of yesterday, then that would be a simple trade for you to look for an entry above the highs for a short. Now, that depends on how much liquidity is here, because institutional money would only change direction if they have enough net orders in the wrong direction. Now, because there's an overwhelming short going on, if they can kind of ruffle people's feathers and pull back one more time and take the high and run stops, then we should go for a short. If that is not the case, then what I would say is to watch, just like with what we had with Euro USD, will be to watch I wouldn't say the low of the beginning of the week per se, as it's more important to look at the low of last week, because the low of last week is right over here. This is the last candle, the lowest price for last week. Okay, so I'll leave this small and I'll leave this a bit bigger and I'll put this as blue. Okay, so what we want to do is that there's a demand zone area here, which if we look and trace back at what price did with it, it was part of bringing in a strong burst of liquidity. And in fact, if we look a bit further, we'll see that the price again didn't return back to this demand zone before taking off on this strong journey. So when the price pulled back here at the end of the week, the market knew exactly what it was doing. It was trying to fill out the unfulfilled efficiency on the market order book, which it did do, and achieved this goal of pulling back here. So for me, and as an entry, scenario one, okay, and I like to give scenarios here. Scenario one would be if the price gave us this re-entry one more time tomorrow. So scenario one, something like this, then let me start the I, scenario. Okay, so with scenario number one, what I would do is be to look out to see if the price will give us a short of this magnitude. Okay, scenario number two, I'm just going to keep on using this arrow and getting in from here. My say as a continuation trade, if price closes beneath here and returns back to the other side of this small area of demand, very similar to Euro USD, then you could look for a continuation trade. Now, in terms of a stop loss, I'll say that the stop loss range will be at the last area where there was a strong push of liquidity, which would be over here. So at a point right here, I would say that continuation entry for scenario two would be over here. And I'm rounding up. So scenario number two, quant entry again. So every time you see me say quant dot, that means continuation entry. Let's make it a bit smaller. Make that blue. Okay, not that color. All right, so we put that there. And then what I would say is that the last demand candle, or the demand candle that gave us the last bit of bullish uptick in price before the price pulled back, is this small area here. So stop losses would be over here. All right, 0.62071 for a trade like this. Now I'm giving you guys wide stop losses so that you can take it for yourself and use it for your advantages, because I'm using the H1. Usually my entries on the 15-minute, but I want to create a session where it's something that is like clay. You guys can mold it however you want, and we can get some really good entries. So this is something that I'll be looking for. Any of these two scenarios will be fantastic. In the case of scenario one, where should the stop loss be? Well, ideally, in a case like this, I would put it above here for space. Okay, I could put it higher, but this is all right for now to have it above here. Reason being is that, to be fair, guys, if you notice, if the body of the candle, of the H1 candle, closes back above this area, then I would already be out of the trade. So you could be cheeky with it and just put your stop loss really over here and have a nice 9.8 pip stop loss. But I try to keep the stop losses a little bit wider. I would say that, in fact, to be fair, this would be a bit too far. I'll just say after the last area, just above the last area of strong liquidity into the market is fine in this range here. Okay, so these are the two scenarios for NZD USD, and my targets really are down to that area. Now, for the, you'll be saying, but I don't want to swing for that long. Can I get in and get back out? Well, if that's what you'd like to do, then the target I have for that is really this area down here. This is the last major area holding demand or holding price above the 60 level. Once the price breaks beneath here, we'll go in beneath 60. So if you want to hold on and get in, this will be what I'm looking for. So the target for me, I would say, is 0.60963. Okay. Now, as always, I like to keep the tradition. I always want to make sure that I look at the news before, I continue. Now, this week is not too news rich, so it's good news. There's not really much news going on. All right. But if I go through the news outlook for this week, there isn't any more US dollar news that can really cause any effect. As I said on the Friday session, that the last piece of US dollar news, which was retail sales, is the only thing that's high impact for this week. Now, there is actually one more piece of news, and it just skipped my head, and I remember now. We do have a speech from Mr. Powell, Jerome Powell, on Friday. I think it's part of a conference that the central bankers in the US do, but Jerome Powell himself will be speaking on Friday. Now, the reason why it's high impact is because it's Jerome Powell. He's the head of the largest currency and the world reserve currency of the world. So even if he coughs and says the wrong thing, it could cause the market to crash. So we should be prepared for volatility even on Friday, in expectancy of something happening. They even use that piece of news to cause some trouble, so we should be prepared for that. Now, tomorrow, tomorrow there isn't any news from what I can see here, but on Thursday, and this is, I'm talking from UK times, all right, we have the Australian dollar employment change news on Thursday morning, 2:30. Now, this news here is expected to be quite bearish. The previous was 53K for employment change or increase, and is expected to increase only by 25K for April. If it's worse than expected, which is less than 25K, or is better than expected, the 25, but worse than the previous, may give us that spike, and the New Zealand dollar might give us that spike for another entry short one more time on the upside, or the price may continue short with it. We also have the unemployment rate news, important too, is at 3.5%, is expected not to change. If it stays that way, then that'll be interesting. If it dips higher, if it gets higher and unemployment increases and the labor force basically is decreasing, which means GDP will be going down, that will be bad, especially for somewhere like Australia, which is very heavily an industry of agriculture and raw materials like gold. All right. Say pound news, I'm not really concentrating on too much. And then on Friday, here we go. So we've got Canadian dollar news, retail sales, and then we have the speech at 4 o'clock. Now, this speech over here doesn't say what the speech is about, but I'm guessing it's probably going to be just a board of governors meeting for central bank conferences that they have around this time of year. All right. So this is my outlook, guys. I hope you enjoyed it. I would love to see more of you on. Share it with your friends. I'll be live again on Thursday, same time. If you have any questions as well, you can put in the comments. I'll try to answer as many as I can on the live comments. If not, comment beneath the video and I'll make sure I spend the time to read through each comment and give you guys some answers. Okay, so I can